Hey guys, it's Jeff Trapp here with the Tax Planning Pros, and I'm so glad you've just decided to join me today. Well, a lot is going on, and we're in full swing here with tax planning season. I know it's the holiday season. You're probably going to holiday parties, having a lot of fun, but don't forget about your year-end tax planning. There's a lot of interesting things going on out in the economy right now that you should be aware of, as it is earnings season in the stock market. And we continue to have cooling inflation. So what does that mean? The stock market continues to go up. It's about 9%, up 9% year over year, which is really, really great. So you should be doing pretty well in your stock portfolios right now. If not, then you need to talk to probably a financial planner or talk to your certified tax strategist to get you aligned with somebody who understands the stock market and retirement planning and what's going on there. But ING economists have said that we can expect the Fed to cut rates up to 6 times in 2024. So if you're a realtor, mortgage broker, real estate investor, this is exciting news, right? Because that means we're going to get more buyers and sellers off the fence. There's going to be more inventory. Home prices are going to go up. And, a lot more people are going to need mortgages. And if you're a real estate investor, you probably want to get in right now and start buying some homes, because this is going to be the lowest prices you're going to see in a while. Because when rates cut, that means prices go up. So just simple supply and demand economics there. So it's going to be a really, really interesting 2024 and 2025. But that's not the reason I'm here today. The reason I'm here today is give you some year-end tax planning tips. And today I want to talk about legal entity structuring, some tips and tricks you can take advantage of when it comes to legal entity structuring before year end. And like always, I'm going to save the best tip for last, because I want you to listen to the episode today. So a couple things that you can do here if you are a business owner, right? There's a few different legal entity structures out there. You've got your LLC, and your LLCs can be taxed as partnerships, S corps, single member LLCs. You can hold real estate in those LLCs. You've got your C corporations, which are favorably taxed at 21%. So C corporations are a great entity because the tax rate is so low. And if your tax rate is higher than 21%, well, you might want to funnel some money through a C corporation. There's 2 ways to get paid out of C corporation. One is through salary. You can also take dividends, which are double taxed, which I'm not a fan of. And then we've got entities like S corporations, which is a pass-through entity similar to a partnership, right? Partnerships and S corps, those are pass-through entities. The reason I like the S corporation for a lot of our business owners is just because of the favorable tax treatment when it comes to self-employment tax. You don't have to pay as much self-employment tax or payroll tax as some of the other entities out there, such as a sole proprietor or a partnership, because in a partnership, if you are a non-passive partner, there's a good chance that your earnings are subject to self-employment tax. Now, there's different levels that you want to be at when it comes to all of these entities. And, I highly encourage you to speak with a certified tax strategist to determine which is the right entity for you and your business. Now, let's say you need to set up an entity between now and year end. You're probably not going to see a whole lot of tax savings, because the date that your entity starts is the date that you can actually, start reporting income and expenses through that entity. Typically, you need to have a bank account set up and everything all ready to go. So if you're looking at a partnership, S corporation, C corporation, a new LLC taxed as a S corp partnership, C corporation, then my suggestion to you would be set that up after December the 15th, because if you do that, you are not required to file an income tax return for 2022 or for 2023, sorry. And you can just, utilize that entity next year and file a tax return basically from January 1st, 2024 through December 31st, 2024. So there's a lot to unpack there. Now, if you've been following us for some time now and you followed our suggestions that, hey, I've got this sole proprietorship business, but I'm going to go ahead and set up that LLC, taxed as a single member LLC, sole proprietorship, and your income is fairly significant this year, what we can do is actually we can petition the IRS to accept your business as an S corporation, to be taxed as an S corporation in 2023. So what does that mean for you, right? So let's say you earn $100,000 in your business this year, and that's the taxable income to your business. That's the net taxable income. So, you may have earned $200,000, you have $100,000 worth of expenses, and then your net taxable income is $100,000. You're going to pay $15,300 in self-employment tax. However, if you make the S corporation election for this year, and we file and do that and petition the IRS, you can potentially save half of that money, the $15,300 divided by 2, which I believe comes out to about $7,750 at a minimum in taxes. And there's a few extra things that we can do to save a little bit more money on that, and if you strategize and plan accordingly. So if you've never heard of this before, this is the first time diving into our podcast, you can book a complimentary consultation with our team. And as always, link below is our free tax playbook. But the LLC late S corporation election, where we petition the IRS, might be a great way for you to go to save money on taxes this year. And plus, there's a whole slew of other strategies that you can apply for this year once you become a legal entity. And we talk about that in many of our previous episodes. But hey, if you want to just not dig through all of the episodes, then go ahead and book that free consultation, link below, and get our free tax playbook. So if you're wondering what type of legal entity structure you need to be before year end to end the year strong, pay the least amount of taxes possible, then these are some great suggestions for you, or these are some great suggestions to lay that foundation for 2024. So once again, I'm Jeff Trapp with the Tax Planning Pros. If you like this episode, if you found it helpful, then please like, share, and subscribe. We want to help as many business owners as possible save money on taxes, because I don't think Uncle Sam spends your hard-earned money better than you do. And let's make sure that people have extra money for the holidays, that extra Santa cash, or whatever holiday that you celebrate. Once again, I'm Jeff Trapp with the Tax Planning Pros. Have a great day, and we look forward to seeing you next week with some year-end tax planning tips.